All right, welcome back to Stock Tricks with Nick for this week's Midweek Movers live stream. We have a ton of information to cover. From just last week, it looked like the market was, it was under the 200-day simple moving average, under all the key moving averages, and selling off on heavier than average volume. But we did see some back and forth towards the end of the week, and Friday, a nice reversal, and then closing up on the day with heavy volume. Monday, we got the follow-through day, so that starts is the official start of a new uptrend. Gives us a reason to be bullish, try to get some money on the long side versus the short side. And then today after hours, we got some, I guess we'll jump ahead. Today we got another gap up, pulled back, and this is what was really important to me, whether we pulled back and then just continued pulling back and selling off as if Friday and Monday were just dead cat bounces. But it pulled back, got supported, buyers stepped in, and we continued to push and close near the high of the day in the S&P 500 and the NASDAQ. We'll cover those in a second. And then we have Google's earnings, AMD's earnings, and PayPal and Starbucks rounded out today. So like always, we'll be going through a market overview, take a look at how the market's been acting in a little bit more depth than what I just said. Go through the 10 stocks or so on my watch list going into tomorrow, and then with any time we have left, go through the stocks that you guys want me to take a look at. We'll be using MarketSmith and E-Trade to break down each of these stocks. With that said, let me jump to the platform. We'll go S&P 500 first, SPY. So let's zoom out here. You could see last week we broke under the 200-day simple moving average. I think that was actually the previous Friday. Closing at the low of the day, clean cut through the 200. That was surprising to me. I thought we would get some support at that level. And then all of last week we were building under the 200-day simple moving average. We had that really scary day on Monday where we gapped down. Let's measure this. We gapped down 1.5%, and then we sold off the first maybe hour and a half, maybe 2 hours, down 4% on the day. And then buyers stepped in. We got the nice reversal. Very strong close. Closed up, I think, 2% or so on the day. It would be up slightly on the day, 0.4. And then from there, we had Fed news. We had Tesla earnings. We had a bunch of different things going on, which you can see here, heavy volatility, heavy volume, but no real price movement. So when there's heavy volume and no price action, that typically shows there's at least on a pullback support in that area, and when we're going to make new highs and you see that heavy volume churning, that typically marks a short-term high in some distribution. So potentially last week we saw again potentially the low. Not our goal as traders to nail the low, but to get back into the market, into trades when we have the highest probability of continuing that uptrend. And then we didn't get the follow-through day on Friday. I know this shows it as a follow-through day because we were up 1.5% or more on more volume than the previous day. But this is just the SPY. This is not the actual S&P 500. So a little bit different there. Did not meet the volume requirements in the actual S&P 500. Does not matter because the next day on Monday, or I guess the next trading day, we got that with a very strong move up. I think this was 1.8%. We broke back above the 200-day simple moving average, back above the 8-day, closing at the high of the day. And this was actually on heavier volume for the S&P 500 than the previous day. So that marked our follow-through day. And from there, we got the follow-through day. Now we're looking, how does it get digested? Do we see an immediate reversal? If we see a distribution day, the first day after a follow-through day, that follow-through day is 95% likely to fail. And starting today, when we pulled back immediately after we gapped up, we were down 0.6, 0.7%. I was like, oh no, here we go. We're going to get that distribution day. Because honestly, outside of oil stocks, I pointed this out on Twitter today, oil stocks and coal and shipping, those big three, we didn't have many leadership groups to kind of follow through on. We got a lot of oversold bounces the last couple days, but not high quality bases breaking out into new highs, that kind of stuff that you would typically see in a follow-through day on more of the growth names. So I was a little bit cautious with it anyway, but I really liked the action that I saw today, and I did start some new long positions that we'll get to in a little bit. But that's the S&P 500. Let's go to the NASDAQ, QQQs. This is getting really interesting because we put in the low. Let's measure from high to low. What did we pull back? High to low, we pulled back 18%. So not quite a bear market, but very steep pullback. Started to see that heavy volume churning. Nice move on Friday, nice move on Friday here, then follow through day on Monday, and then good action today as well. We pulled back to the 8-day EMA, bounced there, and right where we closed is both the 20-day EMA and the 200-day simple moving average. So this is going to be a real test because after hours, we got the Google news, we got the AMD news. I think, let's see, does it show in MarketSmith after hours? I think you can program it to show it, but we're up about 0.5%, I think it was last time I checked after hours. So likely we're going to open up the next day, open up tomorrow above the 200-day, above the 20 EMA. And then from there, when we do get an eventual pullback, because again, the last couple of days from Friday's low to now, we're up 8.3%. Say we gap up another 0.5%, 9% in 3.5 trading days. Typically, you see that on the downside. You see, they're saying stairs up, slowly climbing higher, and then elevators down. But 9% off the lows, that's pretty aggressive. Chances are we need to digest some of those moves. There's other earnings around the corner as well to play into that. I think Facebook is tomorrow, possibly Amazon. Someone let me know in the chat. I think Amazon might be Thursday after the close, but chances are we're going to gap over this 200-day, gap over the 20, and then when we do eventually pull back and test that 200-day, does that hold? Are institutions trying to get positions in that pullback, or are they selling that move? So right now, I do a market recap every day on TikTok. I'm still in a yellow light trading environment, which means we're 25 to 75% invested and with average trade probabilities. So I say that because we're already extended 9%. Now we have to, we're likely going to pull back to the 200 and test that. So that's QQQ. Let's go IWO, the growth ETF that we measure. That got hit the hardest. Small caps aggressively sold off since the beginning of the year, pulled back 22%. Just since this year, we had a 22% pullback. That's brutal. But since then, Friday's low to today's high, up 10%. But you can see still here, the small caps are the weaker group. It's still under the 20 EMA, under the 50, under the 200-day. We're back above the 8, but still there's some reason to be cautious. And then we have ARKK, the other kind of growth ETF that I like to keep track of. And like clockwork, right when Jim Cramer says that it's a great short at $64, that puts in the low, and we rally 20% from there. So we don't want to be buying breakouts, or we don't want to be buying stocks that are already extended from a breakout point because we expect them to pull back at some point, allowing us to get a better entry point. We don't want to be shorting stocks or ETFs that are so beaten down because chances are they're going to snap back to the moving averages. And that's what you're seeing here. You got the 8-day, the 20-day, and a 20% bounce off that after, what was that, high to low pullback? After a 60% pullback from high to low. So you're expecting some of those bounces. He nailed the bottom. I think I saw he's now long ARK. So don't know where that goes. But a lot of the names in ARKK, Teladoc, you see the same thing, stage 4 downtrend, getting a nice bump. DraftKings lately has been jumping off the lows. Let's measure that. 34% move off the lows there. What are some other ones? Coin tested 200 today, failed right around it, 201.45, and then eventually closed. Where did we close here? 197.50. That might be a potential short for me going into tomorrow, depending on how we act above that 200-day simple moving average. I'm right in the middle. I'm trying to keep an open mind here in which direction that we go, but Right now, there's a bunch of reasons to be bullish, few reasons to be bearish, and as long as you're using progressive exposure to get yourself back into the market, so you put on an initial test position. If that position works, we get a breakout, then you want to move your stop up to even or in the money, and then you could take that initial capital risk and then put that into another trade. So you keep, basically you're betting your profits, betting your profits, betting your profits. And if we are in a nice, clean, uptrending market, then that one kind of risk bet that you put on your initial setup can pay for multiple positions. You expand your exposure, and then when you do get that trending market, you have heavy exposure on with still just a minor amount of initial capital risk. So that's what I was trying to do with a couple trades today. We'll go over those kind of in the back half of this, but actually, let's just go over a couple right now. Called out AMR on Twitter going into the day. This was one of my favorite setups. Let's go over to MarketSmith. It is in the second strongest group in the market right now, energy and coal. That's 192nd strongest out of 197. So A+ group strength rating, 91 composite rating, 99 relative strength. Turned around its earnings, 218% year over year, 93% increase in sales, 13% increase in after-tax profit margins. Within the group, it's number 1 on relative strength, and that's really what pays. So AMR was a main focus of mine going into the day, and I did trade it, but unfortunately, if I go to like a 10-minute chart, 1 minute, you could see this stock jumped 7% in 1 minute here. So right once we went over the kind of pivot that I was working on with yesterday's high, I put in my order and it was already up 7%. So I entered right here. And given the market conditions, we had run for 3 days. We were a little bit extended to the upside. If I'm getting in a stock that's already 7% up on the day, chances are it's pulling back and I'm going to get stopped out. So right off the bat, it went up another like 1.5%. I sold into that, a $70 trade, something like that. And it was really unfortunate because you look at this and you're like, oh, there's your perfect entry. Anyone would have nailed that. And I tried, just did not get filled at the correct price, got filled like way up here. And then it continued to run another 7%. So this is a really strong pattern. It was a strong group, strong earnings, strong sales. Basically everything coming together in this trade, and we got the kind of pullback in the market, but this held strong. So that was a name that I was focusing on. Unfortunately, didn't nail the entry point, so it wasn't a huge winner for me. Let's go. What else did I try? Tried SG. I'm going to show you like the losings, or not losing trades, but the non-big winning trades first. SG. This came from the breakout watch list that I post every Sunday. So if you guys aren't subscribed yet, make sure you subscribe because that comes out Sunday morning. This had a very similar look to Dutch Bros, BROS, an IPO, where we came off the lows here on heavy volume. You could see the volume here. Let me switch back to this. You could see the heavy volume here with a nice move, 32% move or so. Continued on higher highs, higher lows, higher highs, higher lows. Then we pulled back to the 10 and 20 EMAs, tightened up, and then I took this with a break over yesterday's high, right over. I got in at 31, so just under yesterday's high. It got out really nice. I was up about 3%, and then it came. I sold a little bit into strength. Thankfully, I did because it came all the way back. I tried to give it a little bit of room in the second half of the day. It went under my entry point around 30.87, 30.85 or so. And it didn't seem like it was snapping back, so I cut the trade at 31 when it did bounce for a second. And then it closed, 30.66 closed. So closed under my entry point. I don't want to be, before I saw Google earnings, AMD earnings, I didn't want to be holding a losing position going into overnight trading. Because again, we just rallied 3 days extremely hard off the lows, oversold, bounce, potential, and then we see a pullback overnight. And I didn't want that risk going into overnight trading. Now I look at this as a potential entry point for tomorrow. That same kind of 31 area, manage my risk against the low of the previous day, which today the low is 29.71. It's about a 3-4% risk there. Maybe we could find intraday another chart, another area to work with. Did I just mess this up? Let's go back to 5 minutes. Come on. Yeah, so we were working with 31. You saw that move. Nice. Everything was looking good. And then we pulled back under it. Things were looking good again. And then this just had no buying pressure, down 4.4% from that area. And I cut the trade right in here at 31. So we'll see how that trades tomorrow. But again, this was maybe a $60 winner, something small like that. Nothing to write home about there. And then had two more trades. Let me find... actually, let me bring up the bros because it was similar and I wanted to kind of point out this idea. So IPO, look at these two charts together, bros, SG. So SG had that heavy volume breakout over the 10, the 20, the 50, checked back and then moved up. And then bros, Dutch bros, heavy volume move through the moving averages up to the 50-day and $50, nice round number. We pulled back, and then yesterday we got going over the 50-day moving average on heavier volume than the previous day. I did take this trade. It came back late in the day, and I cut it for a 1% gain. Did not put the trade back on, kicking myself because obviously in hindsight you see the reaction. It was a strong close yesterday, and then an extremely strong move today. I think it was up another 12%. Yeah, 12% move today on heavy volume here. So with seeing bros do this and knowing SG is in the same group, same kind of style of the breakout, check back, and then move over the 50-day moving average, gave it a shot. Just tried to align my probability, as much probability to my side before taking the trade and managing my risk, and I managed it for a small gain. The trade that I'm still in is CVE. See, this has earnings on the 8th here, not too early, but energy, coal, oil, and gas been the main focus. You saw AMR's move. AMR did move first right in the morning, so I was continue to look at more oil and gas, coal names. I know those aren't the same exact group, but same idea. And you saw CVE, nice pullback to the 8-day or 10-day. I forget what I have on here. Inside candle yesterday really set the trade up nicely for just a break over yesterday's high. And I did get in, got filled at 1466. So yesterday's high was 1465. And still holding 80% of my position. Closing at the high of the day, nice move there, CVE. This is the first trade that I'm holding overnight since like January 4th, which is a good sign because I wouldn't be holding overnight without a profit and without the market in favorable conditions. So we'll see how that goes here. And then I did short ARC in the morning. I thought we had a kind of a gap up, a shortable gap up. Let me go to the 10-day. And we gapped up, and immediately I started my short, added to it as it came down, and I eventually covered when it came back over 75. So that was actually one of my better trades in the day. Right away, shorted the gap up because if we go to the chart, the daily chart, you'd see we had a couple days lows right at the same low, 75.66, 75.61. On January 19th, January 20th. We had one day, Friday move up, really heavy move up yesterday, up 9.5% or so. And then we gapped up right kind of into that area between the 20 and the 10-day EMA. So put the trade on, added to it as it was showing weakness, and then I thought it was just going to roll over, like I said earlier, but eventually it did come back up through 75, and I wanted to lock in my profit there. So those were the trades that I put on today. I'm only going into tomorrow about 20% invested, maybe even a little bit less, maybe 18% with CVE. But it was a good trading day overall, and we saw some good action. So let me get to the watch list. Bring it up here. And if you guys have any chart requests, I don't see any in the chat just yet, but any charts that you guys want to go over, we'll have plenty of time to break them down. The fundamentals, group strength, fund ownership with MarketSmith, and then the chart with the E-Trade platform. It's a little bit easier to see on that one. So get the chat going. What stocks do you guys want to see? All right. First stock that's on my radar is Apple. After nice earning beat, we had 25% year-over-year growth in earnings, 11% in sales, 28% after-tax profit margin improvement. That's awesome. Basically saved the market last week on Friday, closing back above the 50-day moving average. We moved higher on Monday in the follow-through day, cleanly through the 50. There's a little bit of overhead supply here, but the moving averages, it's above all of those. And then we had a nice quiet day here. I was hoping that Google wouldn't destroy earnings, AMD wouldn't crush earnings, and we would open down a little bit, and then taking out today's high, or yesterday's high, 175 area as a potential entry point. Now I'm thinking we probably gap up in this range, and then I want to see a pullback, get supported, and then a potential buy. And that's what makes this gap up so tricky because, again, we've rallied for 3 days. We're going to be gapping up into day 4 after a really steep decline. Short-term traders are going to be taking some profit. Maybe the shorts have been covering the last 3 days. They're done covering, something like that, where we just need to digest the gains overall. So another gap up kind of messes with this chart a little bit, but Apple is not one to sleep on just because of the relative strength it had been showing before the market rolled over. It was fighting in, putting in new highs as the market was rolling earlier. We bounced at the 21 EMA, and then eventually we did lose the 50, but we lost the 50 when the NASDAQ was losing the 200-day and when the S&P 500 was losing like the 150-day. So the reason, let me back up. It was showing great relative strength while the market was rolling over. It had good earnings. Now we're back above all the key moving averages. So this is something that I want to keep on my watch list, see how it reacts. If we can pull back to that 175 level, then we could play it against 175. Keep your stop under that. AMD, does this show the earnings? I think it does. Yeah. AMD, 77%. So earnings were up 77%. Sales up 49%. After-tax profit margin, 23%. We had a nice move the last 3 days, and now after hours, it was trading around like 128 or so. So just below this previous low in 130, and in no man's land between the 50-day simple moving average and the 21 and 8. We'll see how that trades. I don't like to trade stocks under the 50-day moving average, but with explosive enough earnings and that move, we'll see how this one holds up tomorrow. We covered AMR. I just want this one to, let me make sure I want this one to come back in, tighten up a little bit. Am I going to get my wish? Probably not. This was a super strong close. Chances are it just keeps rolling higher, but the stocks that do move the most, you want to have on at least a general watch list as they start pulling back, because you're going to see potentially tradable patterns, and you want to be ready for that. So that's AMR. Google, obviously, they're going to be opening probably around 3,000 tomorrow. At least that's what they were last time I checked after hours. We'll see how that trades. But I saw a tweet that I didn't have a chance to go through too much of their earnings. I saw that they're doing 20-for-1 stock split, meaning if you own one Google stock on the day that they split, they're going to be giving you 20 shares at 1/20th of the price. This allows investors with less capital to invest and buy full shares. I know a lot of brokerages now do the half shares, or what's it called? Totally blanking on it. But when you split up the shares, fractional shares, thanks. Fractional shares. But for those brokerages that don't have fractional shares, Google splitting 20 for 1, it'll give a little bit more liquidity to the name, allow any investor to get a share. Another stock I wanted to point out, HESM. This is in the oil, gas, transportation pipeline. 16th strongest group out of 197. Still in that main kind of section of oil, gas, coal that is holding up well. It's got an A+ group strength, 97 composite rating, and a 94 relative strength. If you've seen the channel before, you know 97, 94. Anything with 290s for relative strength and composite, I want to keep it on a general watch list. Make sure my eyes are set to it when it is setting up, and right now it is setting up. Earnings, we have plus 23, plus 52, plus 23, and plus 42 year over year, each of the last 4 quarters. Sales went from -1 to +9, plus 15, plus 19, so we're seeing acceleration of sales. And after-tax profit margin improving 3, 4, 3, and 5. Within that very strong group, again, A+ group strength rating, it's the 9th strongest stock on relative strength out of 57 and 5th strongest on a composite rating. Fund ownership has been increasing from September to December, 98 to 114. We obviously want to see multiple quarters of that increasing, but we only have one right now. Let's go to E-Trade where you can see the chart a little bit easier. HESM, nope. Come on. Sorry, there we go. All right, so kind of similar to AMR setup, we had a cup, a very strong reversal here. What was that pullback? Actually, that was only 11%. It looks worse on the chart. But then a heavy volume bounce here, false breakout, shakeout, tightening up, and now we're flagging out here, putting in some higher lows. We respected the 10-day EMA here, and we closed right at the main part of the volume shelf. I'm looking for a break over today's high, $29.93. Call it $30. A clean break over 30 is a potential entry point. My one hesitancy with this is it has this distribution day where we tried to rally, sellers stepped in, and on the 19th when sellers stepped in as well. So 2 different areas where sellers proved they were hiding. So if we do get a little break here, 1%, 2% up here, do sellers step in, or is it going to be kind of like AMR where we just cleanly rip through that distribution day on the 20th here? So that's HESM. Let me go back to my list here. All right, next we have, where is it? PLAB. PLAB. So this is in semiconductors, 61st strongest group out of 197. Again, AMD just reported earnings. They're up about, I think, 10%, 10 or 11% after hours. So this is a B+ group strength rating at the moment. Chances are with AMD moving up, maybe this moves up as well. It's got an earnings per share rating of 91, very strong there. Accumulation distribution, B+, solid. Composite rating 96, relative strength rating 97, both 90s. It's in the watch list. This also did a great job at showing relative strength recently. When the market was under the 200-day, under the 50-day, under all the key moving averages, this pulled back and found support at a rising 50-day moving average, never went under the gap, and continues to kind of build out here. And I know looking at this, it goes shoulder, head, shoulder. Maybe we do just drop lower here. But with AMD's action, I'm guessing this actually gaps up tomorrow. And then I would love to see a pullback and then play this against 18 here. So if we could pull back where it's a 1%, 2% stop, so 18.36, something like that, then it's playable against a stop loss at 18. Otherwise, if we open lower and then just take out the high, 18.25, that would be a nice entry point as well. 3rd strongest stock in the group out of 32, 5th strongest on composite basis. Fund ownership has been steadily increasing, had a kind of plateau in March and June, but then picked it up again. Earnings turned it around, minus 19, plus 70, plus 29, plus 230, and that's why you see this gap up here. Sales went from minus 5, plus 12, plus 8, and plus 21, and after-tax profit margin improving as well. So that is PLAB, a semiconductor kind of play that we can work with AMD's pop to kind of play off of. Let me go back to my list. SG we talked about earlier. That's sweet greens. I almost called it sugar green. Retail restaurants, 152 out of 197. But again, this is putting in the IPO base. Had that heavy volume breakout over the key moving averages. Pulled back, and then this is just starting to get the 50-day moving average. So you can see it didn't have it yesterday. No, it didn't have it 2 days ago. Had it Monday. And then today, we still closed under the 50-day moving average. Right now, that's at 31.06. Again, aligning that $31 potential entry point that we're looking for. Not a great fundamental, like earnings negative, sales starting to turn it around, after-tax profit margins negative. We only have one quarter to work with for fund ownership, but we have 98 funds already in the stock. And it's not one of the stronger names in the group because it is working on its IPO base right now. But similar to Bros, how it tested over 50 a couple times, 50-day moving average a couple times before pulling back and eventually setting up. I want to keep locked in to SG, even though I kind of cut the trade for a break even today. Another stock that I want to go over is TWI. This is an auto, truck, and tires, 94th strongest group out of 197. It's a weaker group than ideally. That's a B- group strength rating, B accumulation distribution, but has a strong 87 composite rating, 93 relative strength. And you can see the clear cup and handle forming. It's building out under $10. A break over 10 would be my potential entry point on this, but it has really solid earnings. We went from negative to 139% year over year, 229, 270. So the last 3 quarters have been very strong. Sales plus 8, plus 18, plus 53, plus 48, and then after-tax profit margin improving, went from minus 1.8 to plus 1, plus 3, plus 2. Very small group to work with. It's number 1 on earnings per share, 2nd on relative strength, and 1 on composite. So looking for a break over 10 in a non-tech name. Just in case this was a dead cat bounce, it doesn't look like that anymore, but in case we do get that digestion in the tech names, the oversold kind of bounce names, this is one that's not in that same group that we can still play off of. And last that I have before getting to the stocks in the chat is Victoria's Secrets. This was also on the breakout watch list, so I think 3 of the names are still that we covered were still there. So we covered Bros, Dutch Bros, covered Sweet Greens, and Victoria's Secrets. So 3 out of the 6, pretty solid. Victoria's Secret's also putting in an IPO base, starting to climb the right side here. Today was a potential buy point. I didn't take the trade because I was working on a couple other names at the moment, but still want to keep this on my radar. Let's see. It's in a weaker group, 151 out of 197. That's apparel, clothing, and manufacturing. So D+ group strength rating. That does not add probability to our side, so we have to be a little bit cautious there. Composite rating, 70. That's on the weaker end as well, but relative strength rating, 91. That's good. Earnings per share went from plus 714, plus 177, plus 277 to only plus 4. Stronger comp to work against the COVID days. Sales went from minus 20 to plus 74, plus 51, and then plus 7, and then after-tax profit margin still improving as well. In the group, this is the 2nd strongest stock on relative strength, 3rd strongest on accumulation distribution, and 5th strongest on composite. Fund ownership did decline from September to December of 2021. It had a really strong opening move from, what was this, 45 to 75. I don't know what that is, 80%, 70%. And then it looked like it was flagging out, but then it just dropped out of this flag, broke under 65, and then it just needed time to put in its IPO base here. So let me go to the other chart. Come on. The SCO. So on my other charting platform, I have this downtrend line drawn because we had a gap up on earnings on November 18th, and then that faded. We put in a new low. I love that we took out the lows from the pullback, and it's basically the same, but also the IPO low, because anyone who got in on here or around here or here after this move got shaken out. After this dip down here, we had a pullback of about 5% there, shaking out the lows before another gap up. It wasn't an earnings gap up. I forget what this was, but heaviest volume since IPO week. Yeah. On the 29th, that put it back on the radar. And then we started kind of building out here. The market rolled over. This rolled down as well, but started bucking the trend a little bit earlier on January 24th. Got back above the 50-day moving average. That proved as support 1, 2, 3 days when we pulled back. And then we could have taken this just basically at the opening and breaking over yesterday's high. Did not take that. I would love for this to put in a couple days where we tighten up here and then eventually break out over this downtrend line. Because again, I think, because I have no idea what the market's going to do. No one knows for sure what the market's going to do, and we don't need to make money as traders. We need to find high probability setups and manage our downside risk. And if you do that over and over again with the probability in your favor, you're going to be well off. So what I'm looking for here is not to get too aggressive with this entry, allow it time to flag out under this downtrend line, and then eventually break out. Now that might be one day. I mean, it might happen tomorrow, and I might just miss the trade. But I would love for this to flag out for a couple days, tighten up, allow that volume to continue to decline, and then after some consolidation in the market, we get that clean breakout over yesterday's or today's high, which would be 57.68, and that would kind of match a downtrend line in a day or two there. So that's Victoria's Secrets. That's the last stock that I had on my watch list going into tomorrow. So let's see what you guys want to see. We got fundamentals on WFRD, Weatherford, oil and gas, equipment, so 44th strongest group out of 197. That's an A- group strength rating, accumulation distribution, B, 79 composite rating, relative strength rating, 99. Oh, yeah, okay, WRFD. I was going to say, this chart looks so familiar. Weird action today. Hold on, so we got an initial shakeout, we bounced, tightened up, and then really in the last hour and a half, oh, that would have been a nice move. I didn't have it on my watch list though. So really nice move today, closing in the 85th percentile of the daily range. That's good as well. Earnings, not good. Still negative here. Sales went from minus 11, minus 32 to plus 10 to plus 17, starting to turn around a little bit there. After-tax profit margins still deteriorating, but doing so at a decelerating rate. And we have earnings in 16 days on this one. Fund ownership, we see that kind of steadily increasing after March 2021's low, 53, 66, 76, and 125. Just check in the group. So within that group, it is the strongest stock on relative strength, third strongest on composite basis out of 21 stocks. So that's solid there. What I would be looking for with this name, if you didn't buy it with the break over these highs around $31, if we pull back, if we pull back around 30 and build around there, kind of how we did before, and put in a pivot around 31, then you could buy it. If you're already in the name, closing in the 85th percentile of the range, maybe you took some off, like I took some with CVE, but still a strong move that you want to be holding. WFRD. Next we have PBR. Let's see, that's oil and gas integrated, fifth strongest group out of 197. That's A+ group strength rating, A- accumulation distribution, 99 composite, 99 relative strength, super strong moves there. Earnings went from plus 471, plus 102, over 1,000, over 1,000. That's awesome. Sales minus 29 to plus 6, plus 139, plus 77. Solid there. After-tax profit margins improving, checking all the boxes. Third strongest group out of 22 in the group, or third strongest stock in the group out of 22. Second strongest on accumulation distribution. Number 1 on composite rating. Fund ownership declining though. Interesting. Pretty steadily from December, we went from 404 to 368. But since December, I mean, we had this nice move, beautiful flag pattern before the breakout on January 11th. And now it's extended. So from 11 to 14, 27% gain or something like that. Let's go to a weekly chart. Yeah, this was the buy point. Now we're chasing a little bit up here. I would love for it to pull back and tighten up again. We kind of had a 2-day pullback, which I guess you could have played, but it's still looking a little bit extended on the short term. Let's go NTR. Chemicals and agriculture. 8th strongest group out of 197. Manufacturers fertilizer. Yeah, oh man, I'm kicking myself because I had another fertilizer stock, MOS. This had been on my watch list. I had actually traded this up in here, bought it on this breakout day on the 20th, and then got stopped out for even or a small loss on this day. But this was a name that I kept on the watch list, put it in the cup, and then was building under 40, was looking to buy it with a break over 40, potentially. I didn't end up putting it on my focus list today, so I didn't even see it open above 40 and then break out 11 or 9%, but similar action across the chemicals and agriculture fertilizer groups. Just a little bit weaker on this move, 4.7% versus 9.1. But this name showed a little bit better relative strength. The cup wasn't as deep. This action's kind of all over the place though. Earnings in 15 days. Let's go. Earnings per share has been super strong, 167, 342, 43, and 500% year over year. Sales 17, 11, 16, 43, and after-tax profit margins improving. Composite rating 99, relative strength rating 94. Fund ownership increasing. Checking all the boxes here. If you got in with a move over these 2 days, around 71.50, that's a nice entry point. Otherwise, maybe you can draw a downtrend line if we pull back a day or so and then break from that area. Which one was this? NTR? Wait, let me go back to that. What was the volume on that? 2.5 million. Good enough. Yeah, so we kind of got a downtrend line going. This is Nick asking the market for what he wants, not what's actually going to happen. But something like this would be what I would be looking for to enter as someone who's on the outside looking in, who was not keen enough to get a position in this name or in MOS. MOS. Look at that. What did we gap up? Let's see. The low is 40.13, gap to 40.25. Oh, yeah. See, like, we're still seeing. We'll close that out. We're still seeing the strongest groups not be tech, but let's open this up. Oil and gas, energy, coal, oil and gas, different groups, I guess. One's U.S., one's international. Media periodicals. What is in this group? Huh. Oh, 24,000 shares. Okay. Let's pop this back up. Oil and gas, transportation shipping. This is ZIM, super strong stock. DAC, very strong. GSL? Yeah, GSL. Similar moves. Kicking myself for not getting into ZIM when it broke 60, even though it did pull back on that day, and then we had a gap up. We gapped into man, this just completely fought the downtrend better than any stock that I saw in the market. And I didn't think the market itself was ready earlier on, and that's why I didn't take the trade. But I mean, this left the station. Nice move up here. So oil and gas, shipping, agricultural, telecom, fiber optics, more oil and gas, wood, banks, oil and gas still. So when all that's setting up and it's not the typical tech growth names, I get a little bit more cautious, thinking it might just be an oversold bounce. But I want to get my money into the market, use tight stops. One thing that I didn't do well in 2021 was getting exposure on when we had put in the bottom and we were trending up for a few days. And then once I eventually got comfortable enough with building exposure, I would get rug pulled. You saw how choppy 2021 was for growth stock trading. So one thing that I'm really trying to do is once we start trending higher, exposure on, put your stop losses at 1%, 1.5%. Anything that you need to do to get comfortable to take some risk in these situations. And I'm talking to myself. If you're not comfortable taking the risk and you can't manage a 1% stop or a 1.5% stop, you're busy throughout the day, that's fine. It's different trading strategies. There's plenty of ways to make money in the market. But I know from looking back at my trades, I need to do that. I need to do a better job doing that. So tried to get a couple trades on today. My account was up about 1%. It's solid. It could have been much better if SG held that move. It was up about 2.5% throughout the day, but we'll see. We'll see what happens tomorrow. We're going to gap up over the 200-day simple moving average with the Qs when we pull back. If we pull back to test that, does it get supported? Or once we lose that area, do people rush to sell thinking, okay, that was just a dead cat bounce? And I still think we're in a pretty volatile market. If this hasn't set up the way that you require, the way that you're most comfortable with trading, you don't have to trade in it. Trade when you're ready. All right, I fumbled MOS, DVN, and XOP. I see SPY pulling a little, and I jump ship, kicking myself. Yeah, I mean, I'm right there with you. Look at Bros. Like, I owned this stock at 50 with a break over 50. It went up, came down to 50. I took it off. I wanted to manage my risk well. And then from 50, it went to, 59. So almost a 20% jump that I missed. AMR, I was stalking this. I was ready for this. I put in my order, got filled 7% higher, had to manage my risk. Didn't think we were going to get that kind of move. And I missed out on good gains there. So we're always going to miss trades here and there. But what we want to do is when we do miss a trade, be honest about it, go back, study your mistakes. If it was a situation where like you didn't set an alert close enough to your potential entry point, with AMR, that wasn't the case, but like just using this as an example, just go back and see like where could I have improved? Or just because you took a trade off, just because you got stopped out of a minor trade, don't think about that one trade. Think about in a series of 100 trades with that type of setup, with the market where it's at, is that still the responsible thing to do? If you do that 100 times over, is that going to add probability to your favor, or is it something you can actually work on? Because as traders, we get so caught up in the one trade at a time, like, oh, this trade worked well, I'm a good trader. Oh, these last 3 trades have been tough, I'm a bad trader. You can't think like that. You have to think over a long period of time, thinking in probabilities with risk management at your number one, as your number one responsibility. Where can I make improvements? Where if I implement these improvements over a long period of 100 trades or more with the same types of setups, do I have an edge and I can execute that edge to pull money out of the market? In this case, I'm guessing here, haven't done the study, but like a gap up of 7% after 3 days of railing and a gap up in the market. How likely is that to run another 7%? I'm kicking myself because I made $7 on this instead of cashing in on another 9% move. It was up 16.5%. at the end of the day, another 9.5%, over a long period of time, I'm sure I would have been stopped out of that type of action, getting in at 7% up more often than we get a 16% move. So I take a deep breath looking at that, understanding I didn't get the entry I wanted. I still managed my downside risk. It was still a winning day for my portfolio overall, and I lived to trade another day. So what can you do going back and studying your potential mistakes? I don't want to call them mistakes if it's a loss or you cut a trade too early, because again, we're thinking in a long series of trades with the same types of setups with the market conditions where they're at. What can you do better in that situation? So I don't see any other stock requests here. We're at about 50 minutes, so I'll give you guys another 2 minutes or so to put in any stock requests that you guys want to go over. Otherwise, thank you guys so much for showing up. Make sure you subscribe. I do this trading live stream on Tuesday. Usually next week I'm going to have to do it to Wednesday night. I have family coming into town. And then a breakout watch list on Sunday morning. I'm also on Instagram, Stock Tricks with Nick there, Stock Trick Nick on Twitter, and on TikTok, Stock Tricks with Nick. With that, I don't see any more, so have a great weekend. Let's see how the action goes tomorrow with the gap up with Google and AMD's earnings. I saw PayPal, unfortunately, did not have good earnings. I think they were down 16.5% or so after hours, making in a new low. Earnings are always a gamble. I do not like to hold into earnings unless I have a very, very large profit, and even then, probably take some off. All right, thank you guys for showing up. We'll see you guys on Sunday for the breakout watch list or next Wednesday for the live stream.